Ivana, welcome back. Great to see you.
Thanks for having me, Oliver.
Sure thing. All right, so let's talk some numbers here. What are you expecting for NVIDIA? What kind of report are we looking at this week?
Well, Oliver, we're looking at a pretty strong report from the company. The demand for their current generation Hopper architecture is through the roof. The demand for their next generation Blackwell architecture is as well very strong. The order book is very strong going into 2025. So we expect very strong earnings from the company for this quarter.
What kind of update do you expect? What kind of clarity on the timing for Blackwell and any potential delays? There were obviously reports over the last month and a half that were suggesting they're getting backed up a little bit, some of it of their own doing, having to kind of update designs. Any idea where that stands?
So you're spot on, Oliver. There were reports earlier this month about potential delays in their Blackwell architecture. However, I would highlight that the delays are really on the system side, and systems are really not supposed to be delivered until middle of next year. So we don't think that will have an impact on immediate results. We are going to be looking for information and data points on those delays and whether the supply chain constraints have been cleared out or what the timing would be for them to clear out, because that will be the big driver for numbers going into next year. But for this quarter and the rest of the year, it's all going to be about Hopper and the Blackwell chips, not the systems.
How much right now do you expect? What's that breakdown kind of generally for this earnings in terms of what's going to come from Hopper versus Blackwell?
So the majority for this reported quarter, it's going to be, the majority will be Hopper.
Okay.
For their guided quarter, there is going to be some Blackwell in it. And the CEO guided on the prior call that there is going to be, there was a question whether there will be any contribution, and he said there will be contribution from it. So we expect that the Blackwell contribution will be how they beat numbers for the next 2 quarters.
Got it. And you expect the demand for that to be like, what, 10x their previous architecture? Am I reading that right?
Well, that's what our channel checks are indicating right now. So when you look at how the Hopper architecture was building up the order book in 2023 and 2024, orders were coming in at 10, 20, 30 thousands of units. For the Blackwell, we're seeing them come in like 100, 200, 300 thousands of units. So the demand is significantly higher than the previous generation. And each system contains significantly more GPUs. So as those systems come through, that's why they're so important. We believe the systems alone for the Blackwell can deliver over $100 billion in revenues next year.
Here we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments below so that other traders will be able to find this information more easily on the platform. So here it is, the big day. We can see that share prices are now starting to move lower. Not totally surprising in my view. I think that if you're going to look for ways of positioning in this market with this type of event risk that's going to be released today after the market close. I do think that the much more likely scenario would be for people to start to take money off of the table. Long positions become short positions at that point. Buys become sells once you close that trade. So not totally surprising here to see prices move a bit lower. We are starting to see this in a few different stocks. I also looked at Palantir and Supermicrocomputer recently. Palantir is trading lower. Supermicrocomputer is completely collapsing, falling through the floor at the moment. So overall, there is selling pressure here. I do think that people are starting to take money off of the table, given the size of this current event risk. I think that some people just don't want to be exposed to the market at the moment. So, totally understandable. Not necessarily an indicator of what's coming. We could still very easily see moves to the top side here. And then if that were to happen, we would obviously see an explosive price movement higher. So as things currently stand, what we're looking at is a price low coming in at 122.65. This is a bit low, a bit lower than the 123.10 short-term support zone that was developing earlier. And as we can see here, this is the hourly price chart. So as we can see here, this purple rising line here is the 100-hour exponential moving average. And currently, this is what's catching market prices at the moment. So we're starting to see a little bit of a bounce here. I do expect this to get a lot more volatile into the close of trading today. I think that there are going to be a lot of people that are looking at this stock from a very short-term perspective and trying to sort of scalp, some trades into the close. But if you're not that type of trader, if you're looking at things a bit longer term, I wouldn't necessarily suggest getting in right at the moment. If you're not already in, I would, in my view, it's best to probably just wait for the dust to settle here a bit. Because I do think that things are about to get very erratic here into the close. I think that there's going to be a lot of scalping activity going on, a lot of short-term algorithmic trading going on. So things are probably going to get very choppy here. In the process, we're probably going to see some important technical levels break as well. And you have to take a lot of that with a grain of salt because nothing is going to be more important than the earnings figures themselves. As what we're really looking at here is the guidance figure. We do have a strong potential here for some choppy trading results. Just because the technical level breaks doesn't mean that it's going to be conclusive. If we see a technical level break before the earnings come out, things could just as quickly reverse to the top side once the numbers come out. So you do have to take a lot of these technical signals here with a grain of salt. But what I'm watching to the top side, as I explained in the prior video, would be this 131.26 level. As we can see here, if we move out a bit on the price chart, this is a very important Fibonacci level. And this activity was starting to occur before today's trading session. So I do think that a lot of what you're going to see today is really not valid price movement. However, activity that we were seeing previously is absolutely valid price movement. And as we can see here, there was a very strong level of resistance that was already starting to develop. So I do think that if we do see positive numbers and we see a break above 131.26, you do start to see a very explosive move higher. Because there are going to be some people that are trading into this level with even short positions, if you can believe that, and those positions are going to have to stop and reverse on any sort of break higher here. So I do think that this 131.26 level is a very important level to the top side. Could we see a break there into the earnings report? I think that's even possible, just due to the fact that you're going to get a lot of strange, kind of bizarre trading activity into the close today. I would just suggest be very careful of that. Overall, I'm not really concerned with the price structure a bit longer term if we're looking at this. Overall, I'm not really concerned about the overall price structure of this chart unless we start to break through roughly 119.90. Now, if we fall below there, that's the 200-hour exponential moving average. And then at that point, we would really have to start to redraw this Fibonacci analysis because we would then be looking for moves to the downside or retracements to the downside rather than retracements to the top side. So here's the current market update. Just be ready, have a stop loss in place. Probably should not be getting into trades right now. Things are going to get very erratic here. Then we need to see the earnings report itself and then kind of wait for the dust to settle before establishing new positions. So here's the current market update for NVIDIA Corporation, stock ticker NVDA.
Where would the surprise be then, though, now, Ivana, from the market's perspective, when we've heard from the big buyers of the hyperscalers, the data centers, the Amazons, the Alphabets, et cetera, that are buying all these chips? When we've seen from their earnings and their numbers what their CapEx is, how does the market get surprised in? Like, who's the marginal buyer here? Is it still those companies where, okay, maybe they actually are targeting even more than we knew, or because it's supposed to like a consumer stock, like when Apple's got a phone, there's millions and billions of people who can buy these things, a lot of room for surprise. When it comes to these, like, could that marginal surprise come from if we've already seen the CapEx numbers from these big hyperscalers?
Well, Oliver, remember, for the hyperscalers, they're using these GPUs and selling them as a service. So the more they spend, the more they have the ability to rent as a service. So the only way they can grow revenues is if they keep growing their CapEx at significant numbers. So it's going to be mainly the hyperscalers. And we saw Microsoft highlight that they actually weren't able to deliver and beat on their numbers because they didn't have capacity. Similar with Snowflake, they said that they were capacity constrained during the quarter. So it's really going to be these hyperscalers and large companies stepping up their order book and actually getting delivered what they had been promised in the books.
In terms of growth, you think valuations can handle the kind of tapering off of the growth rate? Because it's still obviously extraordinary, but we're not going to be getting above NVIDIA from 2 quarters ago, right? Peak growth.
Well, Oliver, what's interesting is that if you look at the valuation on earnings or EBITDA, which is what we look at, the company is actually trading right in the middle of the 7 to 10 year valuation range. So we still see the valuation as being pretty attractive here. When the stock hit about 100, that came close to 20 times EV to EBITDA, which we believe is some sort of a floor for the stock. So unless they see earnings downside surprises from there, that is a solid foundation for the stock. And then we don't expect that the upside will come from valuation expansion. We think it's going to come from these earnings beats, which we expect to see.
Got it. Okay. Ivana, while we got you, I love the NVIDIA stuff. You're also watching Marvell this week. NVIDIA, your top holding in SpearX.
Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.